Hi guys, it's Thomas here from COTbase.com. Welcome to our weekly COT review. Today we're going to be analyzing the 44th Commitments of Traders Report of 2022. And as we always do, we shall start off by looking at the largest changes in commercials positions. At the end of the video, I will choose a market. It's actually going to be crude oil that we're going to have a look at with the help of the iCOT Intraday indicator. I think it's always a good idea to choose one market and based on the results of the classic COT analysis, go and dig deep into the specifics of that market. Today it's going to be crude oil, so stick to the end of the video if you're interested. Let's start off with our first market, which will be crude oil, the Brent crude to be specific. It is on top of our list with a 52% change based on a 52-week look back period in commercials net positions. If we open the chart, you will see everything clearly. This is a 1-year time frame, and that is the magnitude of the change in commercials net positions, unquestionably greater than average. It is actually possibly the largest change or the second largest on this 1-year time frame. It is a bearish COT change signal. You can see that when we saw the report back over here in March of 2020, it was just signaling this top over here. Of course, we don't expect this to be the same case, but nevertheless, it is a successful signal after a significant change in traders' net position. So this is indicating that in the short run, we should be expecting a bit of a cool down in prices. And then, of course, at the end of the video, we'll look into the intraday world with the wonderful iCOT intraday indicator. This is the 5 years chart that gives us the opportunity to examine stress levels in the market. You can see that with this sudden change, we have moved away from bullish COT extreme levels, and we're more or less in between the two extremes. You can see the most bearish COT extreme from October of 2018. And we had some significant bullish COT extremes back over here in 2020. This level is more or less in between those two. So it's really the COT change signal that I think you can really act upon if you wanted to from this recent report. The next market we're going to analyze is the US dollar index. You see this true over here. True US dollar index is actually created by COTbase.com, where we combine the individual currency futures to give our users a better perspective. The dollar index in itself, it has COT data, but what we do here is we take these individual currencies and combine the data, and then you get this combined COT data. We believe it is more representative of the market. You can see that we are talking about a bearish COT extreme. On this 5 years chart, you can see the most bearish extreme level that we had back from 2019 in this, of course, this 5-year time period. We are not there. We are actually just a bit moving away from those extreme levels. So the extreme analysis does not indicate anything downwards. Now we should start, of course, should have started with the COT change analysis, but I guess it doesn't matter in what order we analyze the market. So now we have a more wider perspective, understanding of the market. 30% change in commercials net position, much greater than average change size. It is a bullish COT change signal, suggesting that after Friday's decline, we could see the continuation of the rise in the dollar. We shall see what happens. You can see that we had some bullish COT change signals over the past couple of weeks. Another currency for the review, this time the Mexican peso. We talked about the Mexican peso recently. There was this larger change in traders and commercials net positions. You can see that it had absolutely no effect on the market. It has just been going on further rallying against the dollar. Now we are receiving another bearish COT change signal greater than average. So now we have already two. Again, it's just indicating that we are seeing traders rapidly moving their positions all around, and this is indicating a bearish signal. Moving on to large speculators COT Extreme, we've got the Oats on top with a 271 report extreme. We talked about this. Don't forget, as I said, in the certain markets that are not traded on larger volumes, we may have periods of time when we have no COT data, and that's what has been the case in early part of this year for Oats. It is a bullish COT extreme. If you look at it from a 5 years perspective, we could see commercials going up to 1,800 contracts net long, possibly even 2,000 or more. The most bearish extreme was back over here in 2013. So that was a significant, this is a 10-year chart, of course, that we're looking at right now. So it is a more of a bullish extreme, suggesting bottoming in Oats in the next couple of months, or could be years. Don't forget, these extremes could be in the market for quite some time before we see a reaction from the market itself. Cotton will be the next market. Here we have a 126 report extreme, bullish COT extreme, no question about that. It's just increasing and increasing, suggesting we should see what actually happened this week, a rise in the market. So is this the end of this decline? We will see in the next couple of weeks ahead of us. But if so, then of course we should not be surprised, because there has been this bullish extreme in the market for some time now. Then we have coffee, 118 report extreme over here, more or less in between the two major extremes. But if you are looking at it from a shorter time horizon, let's say the 2 years, it is definitely leaning towards the bullish side of the market, suggesting we could see coffee turning north again, and we should see increase in the price of coffee. So let's move over to crude oil. This is a 4-hour candlestick chart. This is crude oil futures market. And this is the iCOT intraday indicator in action. If you want to know more about this wonderful indicator, here at Indicators, you will see the iCOT intraday indicator with example charts, explanation videos, and a lot more to dive into what this indicator is doing. It is an indicator that we developed after many, many years, and we are very proud of it. It has a connection to classic COT analysis. You can see the similarities between the two. So we have these COT charts underneath. I should point out it is not data from CFTC. It is our own indicator, but we do measure stresses in the market, and you can see that on the 4-hour candlestick chart. We had a beautiful extreme in September, indicating this move higher. Right now, we actually finished the week with a bearish extreme here. This stripe signal is quite significant, but we will see what happens in the next couple of days ahead of us. Moving on to the 1-hour time frame, you can see that a stripe signal over here on the 18th of October, a beautiful signal. And throughout the rise, you can see some wonderful levels where the indicator is showing you opportunities to trade beside the trend that, of course, is bullish now. Moving on to the 15-minute time horizon. Here you go. You can see we had some stripe signals in between. And let's finish off, let's say, with a 1-minute candlestick chart. There you go. We had that beautiful stripe signal signaling the bottom on Friday. So a very useful tool if you're interested in more shorter term trading. And I believe that combining classic COT analysis with the iCOT intraday indicator is actually very, very useful. I do appreciate you being with me. I hope you enjoyed this review, and I hope to see you in my next COT review. Have a wonderful weekend. Take care. Goodbye.